Some of our fundamental assumptions were tested last week. In a significant move, TCS brought forward their earnings announcement to coincide with Infosys on the same day. The results were for everyone to see, a subdued if not unsure Infosys being beaten fair and square by a confident and aggressive TCS. The message was not lost on the street. Post-results, Infi fell by 10% to 2,229, while TCS stayed put at 1,250. In Europe, Swiss food giant Nestlé managed to sell 2019 bonds at an effective yield of 1.56%, which is lower than the yield of 1.58% on French 7-year paper. This, despite the sovereign credit rating of France being superior to that of Nestlé. Strange are the ways markets signal their preferences. In another significant development, Mr. Subbarao, RBI governor, sent out a strong message on governance to none other than the government itself. Essentially aimed at the finance ministry bureaucrats, he asked them to desist from directly sending instructions to public sector banks and suggested that these be routed through the individual boards to conform to established norms of corporate governance. The inherent conflict between public sector entities' position as an extended arm of the government for implementation of policy initiatives and as commercial enterprises seeking to maximize shareholder wealth is increasingly becoming a subject of debate. In the revised context of an assertive and rapidly globalizing financial market, the discretionary powers historically enjoyed by the bureaucracy over the PSUs is slowly but surely being challenged. Old habits die hard, but if the target is to raise 40,000 crores through disinvestment, something may have to give. But some assumptions haven't changed. On the same day, news broke that in Canada, Research in Motion, makers of BlackBerry, was selling their corporate jet to save $1 billion per year. Back home, Kingfisher Airline was transferring the ownership of Malia's private jet to another group holding company. In an otherwise lackluster week, Nifty ended in a grumpy mood at 5,227, down 48 points over the week. While FIIs continued shopping, their optimistic reckoning of the future was somewhat marred by the appointment of a committee to review the provisions of GAR. The further unexpected delay of another 6 to 8 weeks to know the fate of GAR challenged the patience of the market. Almost without exception, the headline numbers last week were disappointing. Industrial growth at 2.4% remained under pressure after April growth was revised downwards from 0.1% to a negative 0.9%. Capital goods recorded a miserable negative growth of minus 7.7%, confirming once more that the investment cycle has turned turtle. Bread crude, the bete noir of Indian growth, moved up from $90 to $100. Rupee gave up the early gains to end the week flat at 54.14 to a dollar. Euro crashed to a 2-year low of 1.219 before recovering to above 1.225. FDI fell 37% to $3.2 billion during April-May. Although rains finally covered the whole country, monsoon deficit remained alarming at 20%. Nifty's fall on Thursday seemed to end the short-term uptrend that began on 4th of June. Technical suggests that the index will likely be weak next week, although I don't foresee a precipitate fall. Most of our expert systems show a bias on the short side. We think stocks will have to spend some more time in the cooler before resuming the uptrend. A tentative target for Nifty could be near 5,150. Percentage play will prefer to avoid getting committed until the presidential election on 19th is safely out of the way, unless compelling opportunities surface based on solid earnings beat. Our quantitative pair fund had a relatively quiet week. We closed out the State Bank UCO Bank pair at a small loss. While it did not fulfill our price targets, it had completed the time count. Going into results season, we will be encountering silent periods immediately before and after individual results in order that we do not get caught in event risk. Consequently, transaction frequency is likely to drop. We expect to cover the remaining open positions shortly. Discretion being better part of valor, we didn't do any transactions last week in competitive value fund. Meanwhile, our choice of TCS was vindicated, as indeed were most other holdings. Cummins unexpectedly came out with lower sales guidance, which adversely impacted the stock price. But our policy of sticking to high-quality, good governance, large stocks has insulated us from any major drawdowns, while the fund continues to outperform Nifty by 11%. From next week, we will initiate a separate weekly report card for our quant trading systems. Please do look it up on the website or on YouTube. Meanwhile, here is a snapshot of how QTS fared last week.